Hello, everyone. My name is Mike Vinoy. I'm the head of marketing at Assure, and I want to welcome you to today's webinar, the step-by-step walkthrough of the PPP loan forgiveness application, something we've been waiting for a long time. So let's go ahead and jump in. All right, so first, you might ask, how is it that we know what we're talking about in this area? So as a payroll and human resource software provider for more than 60,000 small businesses, certainly we know by just firsthand experience. But I think more significantly, we play a significant role with an organization called the NPRC, that's the National Payroll Reporting Consortium, where we partner with all the household names and many that you may not have heard in the payroll industry, where we lobby directly with the Small Business Administration, the Department of Labor, the IRS. So when Congress passes these big sweeping laws, right, like the FFCRA or the CARES Act, well-intentioned as they may be, they don't necessarily always understand the nuances of how to actually execute on those plans. And that's really where the NPRC comes in. So not only do we participate, we have a board seat with that organization. So we get firsthand knowledge frequently before it's published. But more importantly, we actually have a seat at the table helping to shape the policies that come out. So we feel expert in this area. What I would say is that in all matters such as this, we're talking about our PPP loan specific today, such a huge, impactful, in many ways, I think for so many companies, small businesses, life-changing. It really is the meaning of survival or not. And it could mean, the penalties or not if not done properly. So I want to set expectation for what's in today. We're going to talk about real quick, just a couple slides about potential changes. I do think that there's going to be changes coming along the way here. I won't steal my thunder, but we'll talk about that. But also why this doesn't always, you might hear something like, hey, I heard so-and-so had a different treatment. Well, that's entirely possible. And we're going to talk a little bit about why that is. Mostly, we're going to walk through the step-by-step application itself, really field by field, page by page. And then whatever time we have left, we'll do some Q&A. What's not in the system, as always, we are not teaching anybody how to game the system. This is taxpayer money in a once in a lifetime, more than a lifetime event where we're trying to help save businesses at a time like this. There's nothing more essential than a paycheck. So we're not trying to game any systems, but this can be complex. So what we want to do is we want to unpack this paycheck protection program, the application specifically today, so that you can fill it out accurately with knowledge. And if you're early in the process, maybe you've just applied, maybe you haven't even been funded yet, or maybe you're mid-cycle, at least you can know what the end game looks like so that you can methodically plan out how you spend your money, right? So that you can maximize the forgiveness. What's also not in is a lot of the qualifying PPP expenses. And the reason is, we've done several webinars on this already. So if you hop on our website, assuresoftware.com/COVID-19, you're going to see a whole list of recorded webinars we've done on a weekly and sometimes 2-3 of these things a week for the last couple of months here on all the legislation, but more specifically on how to maximize PPP loan forgiveness. So today we're literally going to go through the application, but a lot of the definition of what is qualifying expenses, what is not qualifying expenses for both payroll and operating costs, that's already in there. So certainly I'm going to touch on some of that today. But if you want more detail, I would encourage you to check out one of those other recorded webinars on demand. And then last, I'm going to talk in a second about how at the end of the day here, you're going to communicate mostly and get direction from your bank. But we stand here with an opinion, and we think expertise and some authority on the topic, but we do not replace your CPA, your lawyer, or your bank. So by all means, we're talking complex financial planning and strategic HR issues. You should be consulting with your CPA, your lawyer, and your bank. We are here to be another voice and to help educate and hopefully be an aid to you in this really complex process. Okay, so what are some of the pending PPP changes and why might the rules feel different for some people than others? And maybe why we shouldn't get confused by that. So I think, first of all, if you've been attending these other webinars, or if you've just hopped on Google, you kind of know the basics, right? One of the big sticking points, really, from the jump, was this concept of an 8-week period that you had to spend the money. And so when Treasury first put the rules of this together, that the SBA then rolled out as an SBA-backed program, the guidance was, hey, the country's about to shut down. If you remember, the very first guidance that came from the White House was a 14-day shutdown. And so everybody knew that this was going to have a major impact on the economy and small businesses especially. So it was, hey, for approved loans within 10 days, and the money's got to be spent within 8 weeks to pay people. The name of it's PPP, stands for Payroll Protection Program, for a reason. It wasn't meant to pay rents and buy equipment and inventory. It was meant to keep people at work. If you've already laid them off, get them back to work and keep them off unemployment. That was the original intent. Well, the way this thing played out over the following months is, the states and the municipalities, really, they're the ones that control the shelter-in-place orders, not the White House or Congress, because this is state and local mandated shelter orders. And they just lasted way longer than was really originally anticipated. So passed in the House last week on the 28th, and there's a lot of articles on that. I just got a headline here from Forbes I'm sharing, that the House passed a bill that does a few things. It extends the 8-week window in which you got to spend the money from 8 weeks to 24 weeks. It also pushes back the June 30th deadline of which you got to hire everybody back without penalty to the end of the year, to December 31st. There's also some more leeway in there for businesses who couldn't reopen, right? So maybe just simply due to safety issues, maybe you're a concert venue and there's just no way, you're in phase 3, you couldn't reopen for months, and maybe not at all. Maybe you're a school, right? So more flexibility there. And then extended time to repay the loan. And then trying to also add on, it's a bit of a double dip, but up till now, if you got PPP forgiveness, you couldn't then also defer payroll taxes. The bill that passed the House of Representatives last week includes that. And so as of Monday, the Senate said they were taking up the bill soon. They wouldn't commit to a timeline. They came out of conferences yesterday, and there's reasons to be optimistic. There's reasons to maybe be a little concerned. I think it is probably inevitable. This is my opinion now. This is nothing that you should take to the bank. I think changes are going to come. It's just whether they're going to be passed yet. I haven't seen the news this morning, so I don't know if they've made progress. If anything will be passed, hopefully what the intent is, they're going to pass this as a clean standalone bill. It's not going to be tied to some other stimulus, that this can get through pretty quickly. So that said, those are potentially some really big changes that could upend almost everything we're going to talk about the rest of this meeting. So keep it in mind. The people who are earliest on this, their 8-week went, and so those who applied really early and got funded really early, their 8 weeks is up about now, right? And so the applications for forgiveness, the very first people, this is really the first they could be doing it. Presumably the lion's share of people who got funded more like mid and even late April. Still lots of people, millions of companies. There's well over 4 million companies that got funded. A lot of that was happening all through the month of May. So these 8-week windows, there's still plenty of time here. But if you are somebody who your application is due now, work and consult with your bank on, I would say, potentially delay as long as is reasonable for your personal and financial situation, but also along with the rules, regulations that the SBA and your bank provide, because there might be a heck of an advantage for waiting just a few weeks, that more of the loan will be forgiven if you're not already getting all of it forgiven. Okay, so enough prognosticating on what may or may not happen in the future. Last several webinars we've done, we've got a lot of questions during Q&A and questions after the fact. Well, where it's a lot of well, hey, my accountant said this, or my bank said that, and I heard from another business that I know that they didn't have the same thing that you said. So I just want to reiterate, we're given the very best guidance and advice we can. We think we know this stuff pretty well. We live and breathe it every day. But at the end of the day, it's the SBA who writes the rules. And then from the SBA, you don't borrow your PPP money from the SBA, you borrow it from your bank, of which there are over 5,400, I think it's 5,460 some odd banks as of today that are lending money through the PPP program. So that's over 5,400 different opinions on how to interpret a somewhat complex set of rules, right? So I'm going to show you the application here today, but this is still not easy. This is complex. And so it seems perfectly reasonable to me that of 5,400 different banks, you might have several hundred, if not a few thousand different opinions on how some of these fields and questions should be answered. At the end of the day, you have to answer to your bank because they're the one who has to certify to the SBA that you follow the rules according to their due diligence, okay? And at the same time, you're still subject to a potential audit. It's not that we think that's going to happen. SBA has given guidance mid-May that to provide some safe harbor for any loans under $2 million so that the big loans were going to get audited, public companies would get audited. But if you're under $2 million and your bank certifies, you likely won't, but they certainly also left that door open. They didn't close the door. So I think really important why we should be doing what we're doing today and why you should be doing the most homework you can, not just for this webinar, but do your research, get online. There's lots of great articles, lots of great content out there, lots of great videos, and talk to your bank, your attorney, your CPA. At the end of the day, it's your responsibility as the PPP borrower to do this forgiveness calculation. And so depending on who you're working with and what bank, I'm sure you're going to get different levels. Some banks are going to be super helpful. Some are going to really struggle, maybe themselves, let alone providing you that help, okay? So it's the borrower's responsibility to do the calculation. It's the lender's responsibility to make the good faith review of your application. So with that, let's go ahead and jump in and actually look at the application. So if you haven't yet, just go to sba.gov and you don't have to even read that URL. It's super easy to navigate. Just click on the sba.gov and you click to COVID help and you'll see the Paycheck Protection Program links. They're very self-evident, so is the loan forgiveness application. So just click the big old red button in the bottom right to download the form. And when you get the form, so it's 11 pages and it's pretty small print. It reads like a legal document. I would say that what is it? Maybe 2/3 of the document is instruction, and there's really only 3 pages highlighted here in yellow that are actually forms for you to complete. But that instruction, while it is specific, it is legalistic, and it is still not easy. So what we hope to accomplish here today is to help you understand the framework of it. We are going to go through field by field, but you should for sure, I'm going to keep on coming back to this, you should for sure consult with your bank to make sure you're doing it the right way. Your CPA can probably help you. That won't cost most small businesses very much money at all to do so. So the way we're going to look at this, page 1 and 2 are instructions on the whole form itself. Then page 3 is the actual forgiveness form. It's really just a 1-page form. Page 4 and 5 are instructions for the Schedule A. And so if you think about filling out a tax return, you have schedules that kind of inform, your cover page of your return, right? And then page 7 and 8 are instructions for the Schedule A worksheet. This is where most of the work happens. So our past webinars have been on maximizing PPP forgiveness. We've talked about the big buckets. One is keeping salary whole and wages whole for your employees when you bring them back to make sure there's not too much of a reduction. And then number 2 is FTEs. So as long as you're not cutting back pay and you're not cutting back FTEs too much, you can have the opportunity to have the entire loan forgiven. And so that's really what Schedule A worksheet does. So we're going to kind of start briefly at the top. We're going to look at page 3, at least the first portion of it. Then we're going to have to jump to the end to page 9 and talk through what is required to fill out the Schedule A worksheet. To then come back to Schedule A, we'll populate that, and then from there, how that fills out the remaining half, 2/3 of the real form of page 3. Pages 10 and 11. That's just a checklist of supporting documentation and optional demographic information for you to provide. So the highlighted pages, that's the meat. We're going to start at page 3, then go to 9, and then back to 6. Okay. So I'm going to trust you guys can read. You can download the app yourself, the PDF from SBA. But I kind of want to at least call out things that I think are noteworthy. If I start in the top left in my dash line, most of this is self-evident. You don't need somebody to teach you how to fill this stuff out. The SBA PPP loan number, that is what it is. The lender PPP loan number, that is what it is. If you don't know it, you just contact your banker and you'll get it, right? The PPP loan amount, that is what it is. If we start to the top right, just for points of clarification that I think a lot of you guys know it, we've talked about this in previous webinars, but where it says PPP loan disbursement date, that is the disbursement. That's the date that the funds were delivered to you. It's not the date that you applied. It's not the date that you got your confirmation number that the loan was going to be funded. It's not the date your local market or city reopened. It's not the date you started spending the money. It is the date that you got the money. So just, if you got questions on that, we got previous webinars, we go into that in a whole bunch of detail. So that's the date your 8 weeks clock starts ticking. Top left, number of employees at time of submission. So it says number of employees at time of forgiveness application. I think for most people, this is not going to be something you sit down for an hour, fill out the form, and knock it out. So my only guidance there is if you're in flux, you got people coming and going as they're figuring out this new world. Just make sure that number is the bank is going to perceive this the time of forgiveness being when you kind of hit the submit button, when you email this off, you send this and actually deliver this to your bank. So just know that if you put a number in there and you wait, it's going to take you 1 to 3 days or maybe a week or 2 to actually get this thing completed. That number might be in flux, so just be prepared to revisit that. Number 2 from the top right. So you need to put in your EIDL advance amount. So if you remember from prior webinars, there's PPP stimulus. There's also EIDL, the EIDL loans, economic disaster loans, and there was an advance component. So up to $10,000, $1,000 per employee, up to a cap of $10,000. That was an advance. So if you put that advance, however much you received in advance there, that is just going to count against the forgiveness portion, so you can't double dip. So if they gave you a $10,000 grant as part of an EIDL loan, even if you didn't qualify for the loan, but you got the advance, that's just going to tick against the forgiveness portion. But even if you didn't get an advance, or if you even were denied, the SBA wants to tie this back. So don't make the mistake if you didn't get an advance or you got denied your EIDL loan, still put your application number in there. You will have that. And then the bottom here, bottom left. So one of the sticking points that I think got clarified and fixed to some extent to make it easier for folks was that 8-week window. So while it's technically and legally still 8 weeks, make no mistake, it is until it isn't, when it's gonna have to go through Congress and President's gonna have to sign this thing. But for now, it is 8 weeks. That clock started ticking the day you got funded. Well, now there's this concept of the alternate payroll covered period. And what that means is if you got funded on, say, a Wednesday, and your pay period, you pay weekly, and it's Monday through Sunday is your pay period, then you don't have to start the clock ticking on a Wednesday, because the accounting might be a little rough for you, right? Because people don't get paid midweek. But what it did was allow you to start your 8-week period on the first day following first day of that pay period following the day you got funded. So either you're going to start on the PPP loan disbursement date, or it's going to start on the alternate covered period. So if you're a weekly or bi-weekly, that works. If you're twice a month, monthly, you're not, then that doesn't apply. And then the bottom right, safe harbor impact, you just need to check this box so appropriately. So if you've got more than $2 million in your PPP loan, you are subject to audit. If you're not, then technically you have safe harbor. But what I would tell you is while the SBA didn't declare that they said they're going to audit over 2 million, they didn't explicitly say they will not audit under 2 million. Though I think when you just think reasonably about it, more than 4 million loans, 4 million small businesses, I think the average loan is somewhere like 111,000 each. Not going to be physically possible for them to audit all of them, but check the appropriate box. Okay, so that's the top of page 3. The meat of page 3 is kind of the punchline. It really talks about how much you get forgiven. But before we can do that, we got to go out to page 9. So before we start talking the fields, I want to give you a lay of the land. So there's 2 sections to page 9. In page 9, if you've attended the prior webinars, you know that there's 2 main things that go into the forgiveness calculation. So section 1 talks about is to help us calculate, using their formulas, the forgiveness factors about reducing or not reducing pay. So keeping people whole on their checks, and are you still paying people? The bottom half, the bottom third, what I'm calling section 2, they don't legally necessarily call that. You won't see section 1, section 2 in the form. But what I'm calling section 2 is the forgiveness portion based on retaining headcount. So those are the 2 big buckets. If you remember, if you want to see, I'm not going to go into all the details of the formula. Hop on the website, watch one of the old webinars that talks exactly about that. We go deep into those topics, but it's keeping people whole on pay, section 1, and making sure you're still bringing the headcount back, section 2. And then section 1 is in 2 different buckets. So there's table 1 is for staff who are making less than $100,000 a year. Table 2 is if they're making more than $100,000 a year. Okay. So now let's get into the meat. We're going to take on this top section, section 1, if you will, for page 9. I know this looks super busy with all the call outs, but just I want to make sure we got some points of clarification. It really isn't actually that hard. There's a couple of these fields that are a little more nuanced, but let's just start at the top left here. So for every single employee, so if you've got more employees than exist in this form, you're going to have to provide a separate schedule of those, but it's separate. Name by name, employee by employee is going to have their own line. Column 2, it says employee identifier. All they're asking for, and this is explicit, they're asking just for the last 4 digits of their social security number. So if you've got an HR system that assigns an employee number, it's not that. It is just the last 4 of their social. For cash compensation, column 3, the middle column, this is all qualifying wages during the 8-week period. So whether it's the 8 weeks beginning the day you got funded, or you're using the alternate pay period method, alternate period method, it's the all cash compensation, all compensation during that period. So that's, we won't go into all the details. Again, look back to prior webinars, but in essence, it's anything you would consider wages. It's an hourly rate, it's a salary, it's commission, it's bonuses if that's something you normally do. All just normal day in, day out calculation, including, vacation and PTO payments. It excludes any paid leave covered by the Families First Coronavirus Response Act, the FFCRA, because those are, that paid leave is reimbursable through tax credits. So again, you can't double dip. That gets a little bit complex. If you have a very, I'd say, complex, comprehensive payroll HR function with lots of different pay types, this could get quite real complex real fast. If you're an average small business and you've got, you know, 1 or 2 salaried folks and a handful of hourly folks, this should be fairly straightforward to just simply calculate the amount of pay during that 8-week period. Next column, column 4, now up in the top right from my blue call-out box. So here we're calculating the average FTE for that person, right? For on a person by person basis. So unlike what a lot of people in HR are used to, where we, you know, like for the Affordable Care Act, anything over 30 hours a week is considered full-time equivalent. Here it really is a 40-hour week. So if they work 40 or more hours, they count as a 1. That's 1 FTE. If they have less, if they work less than that, you just divide that number by 40 hours, round to the nearest 10th, or they do offer a simplified method that you could just simply say a 1 for anybody 40 more hours and a 0.5 for anybody less than 40 hours. Your choice, how you complete that. And then the last column, column number 5, you only fill this in. So if the person didn't have their income reduced, and so like let's say it's a salaried person, and you just simply brought them back to the same salary and they were paid through that period, then I mean there's no reduction, right? I mean theoretically you could bring a salesperson back, but because the sales environment was so tough during the economic downturn, that maybe they had a 50% reduction. So you would have to then call that out. You know, maybe the sales rep made more because they had, you know, for whatever reason, they had some big success. Maybe they're selling, you know, video conferencing during this crazy time or something, and they did well. So that then they wouldn't be included. So really, you're only looking to put there the percent decrease for anybody who had more than a 25% reduction. And then the last thing, second to last thing, if you go to the bottom for just above box 2 for average FTEs, you do get to include declined offers. So let's say you've opened your shop back up, your city is now open for business, and you're letting everybody in, but you have some employees who simply don't feel safe and they are not ready to come back, or maybe they just have childcare issues that they can't do it. Whatever the reason is, if you have in writing, so you got a good audit trail that they have declined your offers, you're not going to be penalized, right? Also, if you had to terminate someone for cause, you know, maybe not everybody had to come back was somebody you wanted back. If you can document that you terminated them for cause, then you don't get dinged there. And if the employee simply requested that they don't come back, they didn't, for whatever the reason is, as long as you have audit trail, you have protection. So sum up those boxes, and then the second table at the bottom, my call up button to the far right. So that top table, table number 1, that's for all your employees below 100,000. Your bottom table, it's simpler. It's because it's for all employees above that make more than 100,000. But just know that nobody making more than 100,000. So if somebody makes, say, $110,000 a year, it's the up to $100,000 that can go into the calculation. The extra 10,000 they would make would be excluded. So the max number, no matter how high, so if you have a really highly compensated person that blows it out, the max number you can put in that column is $15,385, which is the 8-week run rate of $100,000 compensation. So that's the top portion. So again, look back to prior webinar if you want the definition for some of those qualifying expenses, but that's how you populate the form that is going to then drive some of the data that we come back to on page 6. So let's jump to the bottom half of page 9. So this is actually super simple. All we're doing here is calculating, just comparing a base period to a compare period to see if we qualify for the safe harbor test. So forgive me, just you can read on your own, but I'll try to summarize. So step 1, it's just what is your FTE count between February 15th of 2020 and April 26th of 2020. So basically the spring is as the shelter orders all hit at the worst, what was your FTE count? And then step 2 at February 15th, prior to that. So prior to all these shelter orders going into place, what is that number? And then step number 3, if the entry for step 2 is greater than step 1, then you just go straight to step 4. Otherwise, the FTE reduction safe harbor is not applicable. Okay, so if you by jumping to step 4, you and then enter the actual FTE as of June 30th. Well, what if it's not June 30th yet? That means you're going to have to wait until June 30th to apply. So if you're a company that you've already brought everybody back in your whole, you can submit your application sooner. If you have not brought everybody back yet, but you will by June 30th, then by all means, you should be waiting until at least June 30th before you complete this application. Okay, so this is going to come into play as we come back to page 6 and ultimately page 3 to calculate what your real forgiveness is going to be. So let's go to page 6. Okay, so real quick recap. Page 9, the first section is we're calculating for reduction, reduction in pay, if any. The second section, reduction in FTE, if any. Top half, bottom half. Okay. Now, how that rolls up to page 6, this is actually pretty darn straightforward. This starts to get a little bit easier. We're kind of done with the complex stuff. So quite literally, line 1 and 2, this is going to feel an awful lot like filling out a tax return, if you've ever done that manually for some of you folks. Line 1 and 2, it's quite literally box number 1 and box number 1, box number 2, and box number 3 from page 9 from the Schedule A worksheet. So all you're doing is popping those numbers. For line 3, if you have a 0 in box 3, then you just check that box, right? And so all you're doing is pulling forward that data for calculating what forgiveness there may be. And that's the PPP Schedule A worksheet table 1 totals. If you look here to, I lose my mouse, there we go. For this top section, it's table 1 totals. So now let's jump down to the table 2 totals. It's going to have the same approach with some additional information. So for table 2, we're still just pulling over data for box 4 and 5 from the Schedule A worksheet. Enter cash compensation, right? Box 4. Enter FTE, box 5. So you're just pulling those off the Schedule A worksheet. But then additionally, the non-cash compensation payroll cost during the covered period. Because if you remember, we were only putting the cash compensation in that table. So for line 6, total amount paid by borrower for employer contributions for health insurance. So if you provide group health care for your employees, your cost goes in here. This is additional to the wages that you pay your employees. Line 7, same thing, the borrower portion for retirement plan. So you have a 401k matching that whatever that matching, that qualifies. Line 8, total amount from borrower to, for local taxes, state and local taxes. So unemployment insurance, right? That's administered by state. So you're still paying, you're still on for federal tax, federal payroll taxes, Social Security, etc. But anything that's state and local gets popped in here, okay? And so this is table 2 on page 9. And then here we're talking about compensation for owners. So we had the 2 tables on page 9. We had table 1 for the under 100,000 employee, 100,000 compensated employees. Table 2, this one here was the over 100,000. And then here we're talking about owners. So if you're an owner, you have an LLC, you got a C Corp, whatever your small business is, however it's organized, and you're a W-2 employee, you do not include yourself in table 2. This is only for other employees. So no double counting here. If you are an owner and you're a W-2, this is where you put your income. And again, this can't be designed to enrich an owner. So it's got the $100,000 cap. So if you make less than $100,000 out of the business, and maybe you don't even draw a salary, this is just going to be based on your 2019 return, right? And divide by 12, there's your monthly income to extract. Excuse me, I shouldn't say divide by 12. Extrapolate out to your 8 weeks, and that's going to be your number. If you make over $100,000, whether it's from the return or just a W-2 out of the business, the max you can put in there for yourself as an owner is $15,385, that $100,000 run rate, and that's whether you're an owner employee, you're self-employed, you're a partner, etc. Okay, and from there it's just adding the cost up. So line 10 is payroll cost, where you simply add lines 1, 4, 6, 7, 8, and 9. So again, this is probably starting to feel an awful lot like a tax return. All right, the bottom half, the bottom portion of page 6. So we're identifying this full-time equivalency reduction calculation. And so the way this is going to play out is there's going to be one of two options, right? So option 1 is you didn't have a reduction. And so if you didn't have a reduction, you had 10 people before, you got 10 people now, then you simply check that box and you put a 1 in line 13. Line 13 is what's going to flow to the cover, to page 3, the main form. And so you got a multiplier of 1. If not, then if you do have a reduction in FTEs, you got to go to option 2, which is dividing line 12 by line 11 to enter the result in line 13. So line 11 is your average FTEs during the borrower's chosen reference period. I'll talk more detail on that in a second. And line 12 is the total average FTEs, lines 2 and 5. So I'm not going to go back to the previous slide, but if you remember lines 2 and 5, this is where we were adding up our FTEs for this 8-week period, right? So how many FTEs do we have during the 8-week period divided by our reference period, okay? And that will tell, and then the answer to that is gonna be what goes into line 13. Okay, so for the reference period, we've talked detail in prior webinars, but just as a reminder, you have choices. So primarily it's 2 choices. So when you're going to take your line 12, what your current FTE is, divided by your reference period, you can refer back to either February 15th to June 30th, 2019. So essentially the first half, most of the first half of last year, or January 1st to February 29th of this year. Right, so maybe you're a growing business or you're a shrinking business. One of those 2 reference points might make more sense. Or if neither one of those 2 options make sense because it just doesn't align to your business model, maybe you're a seasonal business based on simply tourism or some other grand event, then you could take any 12-week period between May 1st, 2019 and September 15th, 2019. Okay, so you have your choice. One of those 3 reference periods, take your number of employees at FTEs now, which is the addition of line 2 and 5, divide by that, and that's what goes in line 13. At the end of the day, you got to populate line 13. It's either from option 1 where it becomes a 1, or it's going to be something less than that by dividing out because you did have some type of a reduction in headcount. Okay. So we started at the top of page 3. We went through the tables and the workshops for page 9. We've now brought that data forward into all the sections of page 6. Time to come back to page 3 and figure out what our forgiveness is going to be. Okay. So this starts out super simple. Again, just like a tax return. So payroll and non-payroll costs. Line 1 is simply your payroll cost, which is your Schedule A, line 10. So all you have to do is just pull that forward and populate whatever number is from line 10. The next 3, lines 2, 3, and 4, it's your business mortgage interest payments, it's your business rent or lease payments, and your business utility payments. Now, we went into a fair amount of detail about accrual accounting, what types of expenses do and don't qualify in prior. I'm not going to go into that now, but that is not anywhere else in this form. So you're going to have your documentation of that. The requirements of documentation, I believe, are page 10 of the form, but you're going to roll forward whatever those dollar amounts in. So your mortgage interest, remember it's interest only, it's not the mortgage. So the program is designed to help offset expense, not principal. Principal is about personal arrangement. This is about covering expenses. So the mortgage interest, rent, and utilities go there. Line 5. Here we're starting to now adjust for the full-time equivalency in the salary hourly wage reductions. So again, lines 1, 2, 3, and 4, it's the payroll cost, interest cost, rent expense, and utilities. Those are the big expenses of the business. Now, lines 5, 6, 7, we're talking about what that offset might be in case you reduce salary, you reduce headcount. So line 5, total salary wage reduction, we enter from Schedule A, simply line 3, okay? Line 6, add the amounts on lines 1, 2, 3, and 4, right? This up here. And then line 7, the FTE reduction quotient, right? And so FTE reduction quotient, which is simply the Schedule A, line 13. So remember that what we're testing against here, it's the salary reductions and the FTE reductions. And that takes us down to the magic. So the forgiveness amount, this bottom right corner here, is going to be one of 3 things. So if we take line 8, where you multiplied line 6 by line 7, okay, multiplying those. Line 9 is the actual amount of your loan. And line 10 is if you take your payroll cost, 75% requirement. So if you got $100,000, at least 75,000 of that had to be spent on payroll. If you take your payroll costs and simply divide it by 0.75, so for example, $100,000 loan divided by 0.75, I think is $133,000, some change. So you have 3 standalone numbers. Line 8 number, the modified total. Line 9, your PPP loan amount. Line 10, your payroll cost. And the forgiveness amount is simply the lesser of those 3. So whatever is the least amount. So at the end of the day, you can get, if the least amount is the actual amount of your loan, so like if you had a $100,000 loan, you spent $75,000 of that in payroll, divided by 0.75, that's $133,000. If you didn't have any penalties because you brought everybody back, then your loan would be the lowest dollar amount and you get full forgiveness. If you had, if you didn't spend all that money on payroll, this number would be less, right? If you didn't bring everybody back or you had salaries, this number would be less. And it just is that straightforward. So I say it a little tongue in cheek. This is pretty damn complex. So in and of itself, these calculations are straightforward, but in aggregate, it can be a little bit to get your head around. So it is the borrower's responsibility to complete this. Most any CPA on the planet is there to help you. And so even though your relationship is with your bank, presumably you have your payroll being provided by a service provider, a PEO, your accountant. Maybe we got a few people out here doing it themselves in QuickBooks or something. But for the most part, most everybody has somebody they can rely on for these reports. And for, you know, $200 an hour for an accountant to spend a few hours on this, the idea of not spending, you know, a few $100 to have a CPA help you complete this when it's when you might have, you know, tens of thousands, if not hundreds of thousands of dollars at play, probably seems a little crazy to me. So by all means, engage the professionals, but you are the one responsible for calculating it. That's why you got to understand it, and you need to speak intelligently with that CPA for them to even help you in the first place. So that said, the last thing to do is, you know, it is, you know, certifying that it's all true. So you're making the following representations and certifications Basically, this is you putting your hand in the Bible and taking an oath that, hey, I'm telling the truth here. I'm not lying. I am not stealing taxpayer dollars, because everybody on this call probably has a stake in maximizing these loans, but guarantee everybody in this phone call has a stake paying the taxes that is funding this program. So kind of come back full circle. What we're not doing, we're not teaching tricks here. We don't want anybody to take advantage of this in any unethical way, but it's complex. So understand it so that you can certify it after you, whether you do or don't get the help from an outside professional to complete the calculations and complete the form. It's your name that's going on here, that you represented the truth and you're certifying the accuracy. So with that, I want to thank you for attending, offer up a couple of resources, and maybe we have some time for some questions here. As always, we have on our site, assuresoftware.com/COVID-19, just tons of resources. There are a lot of on-demand webinars, anything you can think of that relates to COVID, whether it's paid leave, whether it's compliance, whether it's tax credits, whether it's tax deferrals, PPP and EIDL loans, in how to maximize forgiveness, all the way up to today. So we'll continue to have these weekly webinars, fully expecting there to be some legislative updates that are going to materially change everything we just reviewed. If not this week, it's going to happen in the near future. I can't imagine it not. It's just too big a buzz and too much bipartisan support for it to not happen. So I really think it's imminent. And then we're going to go through this again and share the updates. So hop on the website, lots of great offers, free HR, some amazing discounts for new payroll customers, free pay cards, discounted COBRA services if you're unfortunate and still have to lay people off. And then I got to brag on our product. It works for remote mobile workforces and specifically has reports that we've built just for people to maximize their PPP forgiveness so that we can demystify some of this calculation for folks. With that, if you guys want to pop in questions, use the GoToWebinar interface. I got a screenshot right there what it looks like. Put them in there and let's see if we can help. So I'm going to open this up. And already there are way more questions that we're going to get to in the next 10, 15 minutes, but I will do my best to, let me see if I can pick some that I think are bigger probability. Did they extend the June 30 deadline to bring back employees? So the answer is no, not yet. I think you got to interpret everything as current state. If I'm not your attorney and I'm just a guy giving him my best advice and making a best prediction, I would say it's going to get extended. If you look back, maybe even just 2 weeks ago, I think the House of Representatives in the Senate were just miles apart, and it was really concerning that these fixes might not happen at all, and certainly if they were, it was going to take a long time. I think people's tones have changed a whole bunch. My sense is Congress is a little bit leery of a round three multi-billion trillion dollar package until they see how, as the Senate would describe it, until they see how this current money is working. Given that, I think fixes to existing programs seem a lot more likely, and key leaders in the Senate have said that they have a desire to take this as a standalone bill, and the House of Representatives passed one that was a standalone bill. So the answer is we'll see, but until then, the law is the law, and it's June 30th. A dental client advised me that ADA has gotten the PPP allocation changed from 75-25 to 60-40. Have you heard anything on that? 60-40 is what was in the bill that passed the House of Representatives, but until that passes the Senate and signed by the president, it's not law. So it is still absolutely positively 75-25. 75% of the money has to be spent on payroll. One of the things that the House was pleading for was, hey, some businesses 75% of their overhead, 75% of their expense isn't payroll. They might have, if you're a restaurant, maybe you got a lot of food, you got a lot of real estate, you got a lot of equipment expense that just doesn't total up to 75%, meaning you could never get your entire loan forgiven. So I know it's being pushed. A lot of people advocating for it, but for sure, as of today, it's still 75% of the money has to be spent on payroll. How does this apply if we got funded early and we run out this week? So my first answer, the thing I'm always going to go back to is ask your bank. Because it doesn't matter what my opinion, my answer is, their answer is going to be the one that counts, because they're the one who has to service your loan and certify back to the SBA. What I would say is, if you were one of the early ones, and good for you for jumping on it, even in its original form, there was always the implication that if you didn't have your hire all your people back, that you had until June 30th to hire them back. And so presumably, it wasn't to explain, there wasn't necessarily criteria. Presumably, there would have had to been some type of documentation to show that you did in fact bring these people back by June 30th, even if June 30th was after your 8-week window. And what are we today? We're June 3rd. So we're in the month of June. It's just hard for me to imagine this isn't going to get changed. I would suspect your bank is going to advise you to let's sit and wait at least a week or two. Presumably the application is going to change. While I haven't seen any commitment, I also have seen articles trying to estimate. I wanted to be able to provide to you guys today. I didn't feel comfortable enough to put a stake in the ground on timing, but I saw articles that were saying that they're expecting once you send your application in, that it could easily take 2 months for the bank to process it. And then imagine the SBA processing and reviewing documents and auditing and then approving and certifying 4.4 or 3 or whatever million loans. This could easily be a 4, 5, 6 month program for all these applications to get approved. So I don't think, because you don't owe the money, I think first payment is due in month 7. You don't owe any money on it yet. So I would not be in a big rush to get that filled out, even if you've already your original 8 weeks is spent. Do you know the deadline? Do you know what the deadline is to submit the application for forgiveness, assuming things don't change? I don't. You know what? We'll find that answer out. To my knowledge, there isn't one. And I shouldn't say that there is, but I'm not gonna. I don't feel confident enough to give the answer. But I think it's a long way out because of that. Knowing that the first 8-week windows were going to end long before June 30th, but June 30th was always a deadline to bring people back. For sure, it's past then. So I feel comfortable saying you have time, but we will, when we send out the recording to this webinar, we'll include that in our answer. Will the slides be available? So yeah, so this is being recorded. We're going to share this presentation, this recorded presentation out for everybody so that you can watch it as many times as you want. You can send it out to any colleagues you want. What if staff chose not to come back? So as long as you get it in writing, SBA gave some further guidance on this. I want to say it was the May 13th update of their Q&A that as long as you have it in writing, presumably that could mean an email or a text. I don't think it has to be some certified letter by any means. But if you have a good, clean audit trail where you've made a good faith offer and they have documented that they are choosing not to come back for whatever reason, then you get protection from that, and that won't count against you. Lots of questions around timing. How long do I have? So I'm going to get back to all you guys on that one. For health insurance, does amount company pays for owners count in line 6? So forgive me without looking right at it, whether it's line 6 or not, but it's the employer portion of health insurance. And actually, let me just jump back over to, and I can tell you. Total paid, yes. So line 6, that's the employer portion of health insurance. Can you include the cost of a pension retirement plan? Honestly, I don't know the answer to that one. You're going to have to consult with your bank or CPA, because you're not talking about contribution of existing employees. You're talking about, presumably, cost of managing a plan. I just don't know well enough to give you an answer or feel comfortable with that one. Same for 401k matches for owners. So I don't know that one off the top of my head. So I know the owners are called out different, and they have to be capped at that $15,000 some odd dollars for $100,000. So if you're, it probably only is even that question probably only even matters if you have owners making less than 100,000. Certainly 401k matches for your under 100,000 or employees up to that amount do count. Because the 401k match counts for your over 100,000 employees, but it can't exceed the $100,000 number, my guess is probably yes, but I'm also kind of guessing that a lot of owners make over 100,000, so it's a moot point. What are we doing on time? Got time for one or two more. A lot of 401k matching. Is S Corp also considered compensation to owners line in Schedule A? So you're definitely going to push my limits on this one. For sure, you need to be consulting with your CPA and bank. But as I understand it, it is either W-2 or W-2 and just your business return is going to calculate what your income is. So you take your 2,000. So let's say you didn't even, maybe you weren't a W-2 out of the business and you only took a draw. You're an S Corp, whatever your 19 business return, whatever, straight line that out against a run rate over the 8-week period would be your compensation for owner. See if I get it. If I can pick out a good one with lots of people for one last question here. What is the definition? This is going to have to be the last one. So what is the definition of lease payments? Strictly building rent, or can be applied to other leases, specifically motor coaches? So I know fleet vehicles, I shouldn't say no. As always, your bank and your CPA. Your CPA is probably going to give you the very best advice on this specific topic, this granular. At the end of the day, regardless of what your CPA says, it's going to be what your bank does or doesn't apply. As I understand it, part of operating expense, if it's a lease on, say, equipment that's qualifying, but vehicles are excluded. There is an allowance, I believe, under utility is that is transportation, but that's meant more for quite literally, bus, mass transit, air, etc., but is not meant for fleet vehicles. So I'm assuming, but I can't guarantee motor coaches will be excluded. So most of the rest of the questions, if I had to put these into buckets, are people asking about timing for how much time they have. Other than that, we're getting into really granular questions that you got to consult your CPA and your bank. And I would just take you back to that one slide at the end of the day. 5,400 some odd banks interpreting one set of SBA guidelines. It's highly likely, in fact, I'm certain it's going to happen. Many people on this call are going to get different interpretations from different banks because they're the ones who have to service these loans. So hopefully this was helpful, made you smarter, and set you up to have a better conversation with your CPA, with your payroll company when it comes time to start filling out these applications. And hopefully you get the very most from your loans. And as soon as we get updates from Congress, changes to the PPP program, we're going to get them out to you as fast as we can. With that, I want to thank everyone for your time and wish you a great day.